All right, Tesla Catalyst 2024. Are there even any? Just kidding, there is. And we're going to talk through them right now. And the number one Tesla Catalyst, stable auto gross margins for the first quarter. As you guys can see by this chart, auto gross margins were declining quarter over quarter for 5 straight quarters. And in Q4, we finally saw a flip. There's a good chance we get another good quarter in Q1, auto gross margins continuing to rise, as what I'm showing you here is the price of lithium. Quarter to date, the price of lithium is coming in significantly lower than the fourth quarter. It's also possible the Cybertruck ramp was dragging down auto margins in the fourth quarter, and the longer that ramp goes on and gets ramped, the better auto gross margins become. So we could see continued improvement in this quarter. I mean, if this chart is any indicator, I think Q1, we're just going to continue that trend, dropping the cost of the vehicle. So the second catalyst Gary listed is the $7,500 EV instant rebate. And in the past, people had to wait till the end of the year when they filed their taxes to claim the $7,500 EV instant rate. And now they get it at the point of sale when they buy a Tesla. However, there is concerns growing that one of the biggest risks on the horizon for Tesla is that Trump is elected and basically peels back the tax credits that the IRA is distributing to American auto manufacturers. The IRA is a cash printer, helping Tesla both on the price and cost side of the equation. If Trump wins and peels these back, it's going to be felt. Lots of Tesla investors respond to these worries, saying the credit actually helps Tesla's competitors more than it helps Tesla. They claim it only helps the manufacturers who suck at making EVs to not lose as much money on EVs. Omar holds an opinion who I always respect greatly on this channel, and he agrees that the credit does create a lot of problems for Tesla, but I know that he also values the tax credit. But he says it's going to be harder for Trump to actually peel back the credit than most people think. He will need the support of his Congress. Republican states are the biggest recipients of IRA funds on the supply side. Many investments are made in the red states. So we'll see how this plays out with the election and the tax credit. If it gets removed, Tesla's going to dominate the competition in America even harder, but it's also going to strengthen the narrative that China is going to penetrate the United States with their electric vehicles. But the tax credit for the short term being point of sale should help Tesla convert sales over these next couple of quarters. The Cybertruck halo effect in the first quarter. Look, the Cybertruck ramp has been slower than people hoped, but the more Cybertrucks get on the road, the more people get flabbergasted and they check out Tesla's other vehicles. I'm going to glance over this catalyst because I think we all know what it means. I think as investors, the honeymoon phase of the Cybertruck release is over. But for pedestrians, people that aren't up to date with Tesla, it's still exciting for them to see a Cybertruck. The Model 3 Highland launch in the first quarter. This is actually a strong catalyst. I think people were holding out on the original Model 3, and that was creating some demand issues. And now we have new demand issues as people are expecting a Model Y Highland. So let's read through some of the concerns from Troy Teslake on Model Y demand. He says the Model Y production line at Giga Texas was designed to produce 500,000 units a year with 4 crews working 40 hours a week. It currently operates at 35% of its capacity because demand is limited and US made batteries are limited, which are needed for the $7,500 tax credit. He says Model Y long range used to be $65,000 in December 2022, and there was no tax credit. It dropped to $48,000, and there was a $7,500 tax credit, so $41,000 throughout 2023. That's a 37% drop. US sales should have increased by 2 times, 74%. Instead, it increased by only 10% in 2023. Here are some factors that affect Tesla's Q1 deliveries. Model 3 production pause and slow down at the Fremont factory, Chinese New Year, low Cybertruck production, and Model Y is demand limited everywhere. Supply exceeds demand. Tesla just dropped the price of the Model Y by $1,000. They said that they're going to put it back in March. They just said that it's a cyclical industry. In the first quarter, it's harder to sell vehicles. And people, I mean, the Highland is really cool. Check out this video that Tesla just released of the Model 3 Highland. The ambient lighting looks really fun. Everything is super sleek. There's lots of performance upgrades. It's more aerodynamic. People saw this and they expect it for the Model Y, so they're waiting for the Model Y. And look, Troy Teslike is widely regarded on X because he uses VIN data to accurately project Tesla's deliveries. But as negative as that might have seemed, Tesla has more supply than demand on the Model Y right now. Model Y is the best selling vehicle in the world. And it's not supposed to be. It's an electric vehicle that's a lot more expensive than ICE alternatives that sell for, $19,000, $20,000 and it's still selling more units. Just because Tesla could make more Model Ys than they are actually selling right now doesn't mean that it's a bad product or that people don't want it. It's the best selling car in the world. Right now, it's the first quarter. People don't want to buy cars. Interest rates are super high. If you want to if you want to take a loan and buy a Model Y, you're paying a lot of money in interest, and yet people are still buying them. So the fifth catalyst is very, very interesting. A new compensation plan for Elon Musk. Gary Black puts a timeline of the first quarter. We'll see when this happens, but this would just be really exciting because it would start to feel like 2018 when Elon Musk got that compensation plan that just got rescinded. But Tesla is appealing that. A new compensation plan for Elon Musk, however, it would just create so much confidence for investors because now it's all systems go. He has complained that he's working for free, and Twitter or X is private, so he basically owns all of X. And so he seems to have a lot more interest in growing that right now, and he has been growing it. I mean, X users are up skyrocketing. It's like the number one app on the App Store. And so investors who invested in X are tweeting how excited they are about Elon and how he's turned the ship around at X. And a new compensation plan for Elon at Tesla would probably just make everyone feel like he's invested in it again. And if you know Elon's personality, he's motivated by tangible goals that he has to reach. For example, in the factory, he puts screens up all around the factory that shows the live count for how many million miles have been driven on FSD. And so he wants his teams to get to these goals. He sets numbers that he wants to reach. So a new compensation plan with tranches would just be really good for Elon to basically get the team fired up again. And what makes this number 5, the compensation plan, ultimately so important is that Tesla or Elon, he wants 25% control of Tesla because this is some serious technology we're talking about with AI. It's got the potential to do serious damage if it's mismanaged. So as we go to catalyst number 8, Tesla share buybacks, how is that going to influence Elon's ability to get 25% control of Tesla? Maybe Tesla doing a buyback would instill a whole ton of confidence in investors that Tesla is confident that they are going to solve AI, that Optimus is going to be successful, that FSD is going to reach an autonomous state. And what is the hesitation with buybacks? Is it because the AI race is so expensive? Is the hesitation because the automotive industry is kind of in question right now with high interest rates, the cyclicality of the industry? Sometimes people don't want to buy new cars at a given time. Elon has voiced his concerns about times of financial crisis. The guy's been a businessman for several decades and he's lived through some very desperate times where he didn't have the cash that he needed, and raising money in times of looming bankruptcy was very traumatic and scary. Today, one of the leading indicators of inflation came in a lot hotter than expected at 2%. The core PPI was supposed to come in at 1.6%. AJ is a former investment analyst at Goldman Sachs. He says the inflation picture is not looking great. I know nobody wants to hear it, but if I was a Fed official, I don't see how I can start cutting rates given my priorities if he was an official. And if we go back to the CPI print that we got on February 13th, that dropped the March rate cut expectation from 16% to below 6%. But more importantly, the May rate cut expectation dropped from over 50% to just 33%. So these high inflation rates, they're dragging on. So Gary has a catalyst number 6, the Fed's pivot on the interest rates in the second quarter, but the data that AJ just showed us say that's only about a 33% chance. And while it would be a great catalyst because when people take out a loan to buy a Tesla, they're not going to have to pay as much interest, so they'll be more likely to buy a Tesla. It's going to give Tesla more pricing power. That's going to help margins. That's going to help Tesla's profitability, and that's going to help us investors. Right now, the chances of that happening in the second quarter are about 33%. Now, in Tesla FSD OEM licensing deal, this was talked about a lot in 2023. It didn't happen. Now we're here talking about it in 2024. And I mean, OEMs, at least in America, don't seem like they're in a good position to do this right now because they're losing so much money on EVs. It's going to take 2 to 3 years to implement the hardware and software for them to take on Tesla's technology. And I think it really comes down to V12. We're going to see a wide rollout of V12 literally any day now, Elon. And when we do, if we can get some really good reviews, people are extremely excited about it. We start to see the take rate rise. It drives more like a human. People feel like they can no longer live without it. That's maybe when these OEMs say, you know what? If we even have a chance at living, then we need to license this technology from Tesla. Tesla continues to take more and more of the potential free cash flow in the automotive industry. They're already taking money out of other OEMs' pockets through regulatory credits and through supercharging. Add in the software, and Bob's your uncle. Now, the ninth catalyst is the next gen vehicle. Troy Teslike says, based on my research, looking at data points in the past, I estimate that Tesla will unveil the compact car in March 2025, and the first 1,000 units will be produced by the end of April 2026. I disagree with this take. I see where he's getting these ideas. He says he's looking at data points, but he hasn't showed us those data points. But the row on the right, the time it took is similar to other models that Tesla has rolled out. But the compact car, this is a very, 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 very touchy product. If you unveil the compact car in March 2025 and you don't actually start producing it till April 2026, what is going to happen to Model 3 and Model Y sales? That is not going to be good if you promise a cheaper, similar product and then everyone's waiting for it. I think Troy missed the mark here pretty large. I don't think Tesla does an unveil event a year before they produce this vehicle. That sounds like a very bad idea, considering that millions and millions and millions and millions of people are going to want this product. I think that Gary putting the $25,000 next gen vehicle forward year 2025 is him saying, I think this thing gets produced 1,000 units or whatever in 2025. Optimus deliveries in 2025. I mean, that's a major catalyst depending on how much useful tasks it can do at the beginning, but it's more about the forward looking ideas. If you have interest rates come down, which turns sentiment towards growth stocks, combined with some amazing videos of Optimus, of it doing useful tasks on an autonomous platform, that will be giving Tesla a very high PE because people are just not going to be able to ignore the potential. That's a huge catalyst. Tesla's such an interesting stock because it's such a long-term play right now. And it's such an interesting stock because it goes sideways for so long. And then when it decides to go up, it's like the biggest hit of the best thing you ever felt. And it happens so fast and everybody's talking about it and everybody's like, holy crap, I got to buy it. But you already had it. And it's the best feeling. That's what 2020 felt like. And I'm waiting till we get to feel it again. Are you thinking I'm emotionally charged? No. I kind of just languine, chill, vibe until it comes because there's a lot of just building right now. Elon Musk is going to get his comp plan, and then it's just everything kind of is going to fit together. There's been so much noise, but there is 10 catalysts for all of you, and we talked about them. So that was fun. Yeah, see you guys soon, and see ya.